Off. Miss you guys a lot. I've been completely busy. It's been pretty hectic on the medical side. I'm currently doing OBGYN rotation. Just finished off surgical component, the gynecology for the OR, and then going to do clinic next week, and then labor and delivery. So it's been pretty hectic. Uh, and just a couple quick updates. Working on a couple of projects that are going to be publishable. I'm going to be sharing it with you guys for anyone that's interested. But I hope everyone's doing well. Lots is happening in the market. Literally, things are just a couple of weeks ago, we had a banking crisis. Now I feel like that's somewhat calmed down, but yet, we're still trying to basically see what other shenanigans banks have essentially been doing that we won't really know until shit breaks loose. But overall, I came online today to talk to you guys, give you a quick update, and just talk about overall what's kind of going through my mind. So first things first, the elephant in the room. Well, not really. A bunch of people on our stock terminal. We've known that this was the week where Clover was going to get their delisting notice. They've been under $1 for, I believe, 30 consecutive days, and according to the NASDAQ rules, they get a delisting notice. Now, what would be nice is, which is why I made a petition if you guys want to sign it. It's in one of the videos that we made in the past. We threw a petition. Now, granted, I don't really do this, but this is for retail investors that want to voice their opinion. This is for you guys. But it will be nice to have a discussion, maybe President Toy or anyone from the Clover management team can just come online to explain what is their pathway out of this delisting. But I will tell you right now, indirectly, what they have done, just in case we haven't really discussed it yet. They just are going to lay off about 10% of their workforce. Clover Health are hiring a third-party team, which we will go over. We'll break it down and everything. But overall, that is going to have, by 2024, an approximate savings of around $30 million every single year. So you do the math, just that right there will help them decrease their cash burn by $30 million by 2024. Added on to all the other things they're working on, the main takeaway, the main thing that needs to happen right now, and this is what I'm looking at. I'm going to start from outside of our control, like exterior, all the way interior. The thing that's outside of our control is the Federal Reserve. Now, I have to admit, this Federal Reserve has been really forthcoming and really communicative about what they're going to do. It's easy to telegraph what they're going to do. For all the folks that have been in the market for quite some time, you may recall Federal Reservists, they tend to not do they don't really say anything. They don't really communicate what they're going to do. So I applaud Jerome Powell for pretty much telegraphing in all the federal chairs around the United States. What people don't understand is that we have a couple of crises that are in the making right now. We have commercial real estate dying, essentially leasings that are about to come up and rechanged, and a lot of people are pulling out of their resident, their commercial real estate, and a lot of these people are going to default. And so the question is that going to tap into Main Street? Because that's when the stock market's going to be affected. Now, personally, from my understanding, it's pretty contained right now. So we have those issues being monitored right now. The biggest one is inflation. We need inflation. The Federal Reserve has been very clear. Inflation needs to go down to 2%. Now, is Jerome Powell going to yield to 3%, 4%? I'm not too sure. All I know is 6% inflation is very sticky. And around that area is pretty sticky. It can go up and down. And the question is when are we going to go down? And once that happens, we're going to be at a better position, a more powerful position in terms of understanding where the macroeconomic environment is going to be at. Okay? So that is unfortunately outside of our control. We really don't have control over that. Also, the war between Russia and Ukraine. That's another thing that needs to unfortunately be massaged out and solved. And that's been a depressor on the market, whether we like it or not. So there's a couple of exterior issues that the market has priced in. I wouldn't say a war between China and Taiwan, but definitely China trying to, not really, but they're trying to overthrow the US dollar with the creation of BRICS, India and a couple of other folks coming together to exchange currencies through a domain other than the United States dollar. So there's a couple of bearish sentiment. Now, if you go ahead and if we analyze the bearish sentiment, it's at a level that I haven't seen in such a long time. We're talking 15, 20-year levels, right? Now, historically, there was a couple of surveys that were asked amongst the general people about investing. These are just your regular Joe Schmoes. And all of them are saying this is a terrible time to invest. Now, if you go ahead and you follow this 5 years ago, 10 years ago, 15 years ago, the people that said it was so about like 20% said it was a good time to invest. The rest said it wasn't. Well, the people that said it was a terrible time to invest during the 2008 financial crisis, they were wrong. And those 20% around were correct. What I'm basically trying to share with you is when people are fearful, that's when you have to be greedy. I mean, you have to understand generating wealth is very difficult. I would say this is a mixture of so many different types of drops. The one that speaks out the most to me is the dot-com crash, where a lot of tech companies dropped in the pennies. We're talking, if you don't recall, Amazon dropping over 90%. Imagine all those folks that held on to those companies, what they were feeling. Just imagine. Now, is it very difficult to pick out your Jeff Bezos, your Elons of the world, your Mark Zuckerbergs of the world? Of course it's difficult. It's very hard, especially with this new AI movement that we're doing. It's very difficult. So these are the exterior things that I'm looking at. The biggest thing is the Federal Reserve. Now let's internally go ahead and switch to Clover Health. It's I save the best for last because it's really the most simplest. Clover needs to reduce their cash burn. They need to decrease their net burn and increase their free cash flow, right? So within the statement of free cash flows, there's three little lines. And what they want to do is they want to start decreasing capital expenditures or just keep them constant, but making sure they have essentially positive free cash flow, because once you subtract cash from operations, subtract it from capital expenditures, you get free cash flow. And that is how we evaluate companies. Now, on average, assuming it's a non-SaaS company, which is what we've been doing, we do a 5% revenue percentage of the revenue and estimate the free cash flow through that direction. Now, we had to lower the revenue percentage growth because of them trying to prioritize profitability because the market has shifted. So what needs to happen right now is that Clover is under survival right now. They are trying to survive. They are coming to a point where they are close to becoming extinct. And it's up for the management team to essentially go ahead and secure their ability to communicate with Wall Street to show that their business model actually works. Oh, what's up with the sunglasses? I'll take them off here. It's just I'm currently outside right now, and I'm really it's Arizona. It's pretty sunny, but overall, also I haven't shaved too. It's been really hectic in my medical life, but overall, we'll go through the comments right now. I saw a couple actually. Just one popped up and then it just disappeared. What's happening? Oh, yep. And Danny, how you doing? So that's pretty much going back. Sorry, you distracted me. I was talking about the positive free cash flow. Right now, the company is in survival mode. And if you looked at the net income burn from 2021 to 2022, they're moving in the right direction. It's just right now, they need to get in a position to essentially prioritize profitability. Now, personally, if you look at my videos from 2021 and 2021 and 2022, I said that they're not going to achieve profitability by 2023. It's just in my calculations, they are not going to achieve I do not believe they are going to achieve profitability by 2023. It just doesn't make sense. My calculations has them doing it at the end of 2024, and then 2025, 2026 is when we start to see the real grind. Now, a great proxy, if you guys want to gauge, just recently, Kathy Woods just disclosed her price target for Tesla in 2027, and the price target for Tesla was around $2,000, which is just insane. It's around a couple of $1 trillion in market cap. But what that tells me is it tells me indirectly. I don't care about the price target. I care about the assumptions she's been making. And from my mind, it's basically telling me that 2027 is when she expects the bull market to go insane, plus or minus maybe 1 year and a half. It's very hard to predict the future, especially in such close proximity. Another thing is a famous hedge fund just predicted that in about the next, by 2030, Bitcoin should hit around $150,000. So it tells me and it gauges me when these big money people that have been sitting on the sidelines, when they're going to start stepping in the market. Now, again, why am I referencing Kathy Woods? Why am I referencing Bitcoin? Why am I referencing these assets that have been around for 12 years? Why? Well, these have become a risk on. I hate to use the word risk on, risk off. It's a word invented by Wall Street. But if you were to talk to folks in 2019 and 2020 and 2020, a little bit in 2021, people prioritized growth over profitability. Now, you're going to hear a lot of folks, I'm never going to buy an unprofitable company. I'm never going to go ahead and do this. But the thing is, if you look at value and growth, and we have that in the Mastering Stock Market course, you can look at the growth and value. There are certain times of the years, like within years, 10, 15 years, where growth outperforms value. And then where value outperforms growth. Like, for example, Earn of Av. Another example is Energy Transfer. Other value companies that offer a great dividend, they're doing great right now. They're doing great. The problem is when it's time for growth to grow, these stocks tend to grow approximately 5 to 10% per year. And it's a very slow and steady growth. But what most folks don't understand is that when growth stocks wake up, it's going to be a massive explosion, and all that money gets recapitalized and repositioned. A lot of hedge funds, what they're doing, and this is where it's really cool to be an active investor, because these hedge funds and these portfolio managers, what they do, and these chartered financial analysts, CFAs, they always have to be making money for their clients. And you can see it within our price targets. If amongst all the stocks that we looked at, money gets allocated in different sectors, and you just have to be the first one to get there. And one hedge fund does it, the other one, and then it becomes a self-fulfilling prophecy. It's just right now, they have to do that, because if Joe Schmo down the road, hedge fund B, has made 20% this year, and hedge fund A has only made 5%, well then as a person who doesn't know nothing about the stock market, I'm going to go in and I'm going to say, well, I want hedge fund B. So this is why a lot of these, portfolio managers, they have to do this in order to survive. Okay. This gives us an opportunity because stocks like these have been slammed. Okay. So let me go ahead and take a look at the comments here really quickly. She thinks, yeah, I don't know about Kathy Wood's $1 million prediction by 2020, but by 2030. I think she says these outlandish claims to become relevant. She's almost like a Meet Kevin in the portfolio manager world. No one really respects her, to be quite frankly honest. I like her vision. She is right, but I think she's like 20, 30 years ahead of herself. So now that we went ahead and talked about the financials, so here it is. Mr. Feather Incap said something really good. They've been focused on scaling without profit. This is a big test. Absolutely. I feel like SDC is going through similar. I'll take a look at what is that? Smile Direct Club? SDC Smile Direct Club. I'm not too sure. But now let's go ahead and let's talk about some cool stuff. Okay. So right now, ladies and gentlemen, we're living in a market where money is very, cash is king, right? And as an investor, I have to ask myself, should I just go ahead and buy a 3-month treasury bill that's paying me 5%? I can make 5% right now through a treasury bill, a money market fund, right? Make 5%, get a 3-month T-bill or a 6-month T-bill or a 12-month T-bill. So these strategies of what's happening right now is there's a lot of money headed into the T-bills. And this all started when the bank crisis happened. There was a lot of rumors floating around Wall Street speculating that this bank run was an attack on banks that were crypto friendly. Now, I must say, I analyzed the financial statements for Signature Bank of New York, and I will tell you that their financials is very strong. And it's very clear that the government is attacking cryptocurrency. And we're going to start seeing more attacks on cryptocurrency. In fact, Coinbase has a high probability now and has threatened the United States government into leaving and going to Europe. So we're going to be seeing these in the news articles very shortly. Another thing that I want to talk about is artificial intelligence. Now, we all got a taste of what AI does. In fact, we pretty much stacked our stock terminal on top of GPT. So now we have our members asking really great questions, doing a bunch of calculations through it, which I don't trust its math yet. It sucks at math. But asking a lot of great questions with the AI. And it's quite interesting. There's a lot of studies that have been going out right now regarding how AI is actually outperforming doctors. And that's really just really fascinating, and it really pisses me off because I spent over 10 years mastering the art of medicine. And here's this little BITCH of a machine that can pretty much outthink me, which is like, okay. But that's okay, right? It only adds to what Clover can create. Clover has to show us how this AI can actually decrease MCR. They need to show us, and they need to show us through the numbers. And as well, obviously, through the outcomes. Now, we're getting a lot of great stuff, feedback from their doctors. They love the people that use Clover. They love it. Now we just got to really see the numbers. We got to see, is the numbers going to make sense? And understand this. Once the numbers flip to becoming positive and free cash flow becomes positive, you already know what's going to happen. You already know what's going to happen. I mean, I don't have to. I mean, I hope that for people that don't know, just look at a couple of stocks. Look up AMD when it was free cash flow negative and was burning cash like Clover. It was trading at $2. Look at AMD now, $70, $60 plus. Look up Enphase when they were negative free cash flow to being positive. They were trading at $5, $4. Now it's $200 plus, $250 plus. Look at Tesla when it was negative free cash flow. We all know that. We always use that example. I'm giving you other ones. AMD, Nvidia. Once this becomes free cash flow positive, you're going to see a little bump, a blurb. But you know when the big jump is going to happen? I don't know why it's like this. I think maybe the market may become smarter. But if I look at all the other patterns, usually stocks rise up near their intrinsic value when net income becomes positive. So it goes in different levels. It starts off with free cash flow, which is good. But Wall Street doesn't seem to jump it up that high. Maybe they might change it because there's a lot of retail investors watching this stock. But once a stock becomes, in my experience of looking at companies, when it becomes negative income positive, then the stock just literally soars. And I just want you to save this thought in your back pocket, okay? 5 years from now, 10 years from now, and hopefully we can look back at how we're feeling right now and kind of like just look back and just kind of, and for all the people that are still there in the next 5-10 years from now. Yes, you will have a lot of money. You will have a lot. But I want you to just think, and I'm talking to our future selves, think about how hard it is to gain wealth in America. Just think how strong your mental capacity has to be. Because it's easier, everyone's a genius in a bull market. And it's easy to say when a stock dips down 5%, 10%, it's easy to say, be greedy when others are fearful. But the real challenge and the real test is when a stock literally crashes down, crashes. You mentioned, yep, I did in the earlier part of the video about the UST. And I do believe the economy is pretty much in a fragile space right now. Are we going to hit a recession? Are we not? I'm expecting, based off of my analysis, the recession should hit anywhere between September, October of this year. But hold on, guys. If everyone thinks the recession's coming, then is it going to be a soft recession? If we're all hyper-focused on it, then is it going to happen? I don't think so, right? But overall, if you were to just kind of eliminate the noise, eliminate the Federal Reserve, eliminate just all of that noise and focus on just the fundamentals. If they become free cash flow positive, it's game over. It's game over. That's it. It's game over. But I want you to think of what I said earlier. How difficult it is to become wealthy in this country. It is very, very, very difficult. It not only requires discipline and consistency, but you have to have a mental fortitude, just a strong mental fortress, to not look at things at face value. In future videos, and my apologies, I've been really busy. My humblest apologies. We're going to be talking about the increased short volume on Clover and on other stocks. Yes, the hedge funds have been shorting a lot of these stocks. And for all of our stock terminal members and our mastering stock market students, go to the Smart Money, Dumb Money. Look at it. What is it showing you? It shows you dumb money is still going in, but smart money is not. They're not participating right now. In fact, they're shorting the crap out of the market because they want the market to just break. Why do they want it to break? So they can get in at a better price. So you're going to start seeing an earnings recession, and they're going to try to drive that stock down. In fact, for all of our members, look up at the bullseye and look up April 17, and you will see an AI hit red put on Tesla. And that would have helped you know that Tesla was going down. Because there's a lot of negative sentiment on Tesla going down. We didn't make a video, again, I'm sorry, but I try to keep you guys informed on the stock terminal. But yeah, so that's pretty much kind of my thoughts right now. I would have had it's all from my mind. There is no computer in front of me. There's nothing here, right? It's all from my mind. But we will definitely have a better talk. I just wanted to sit down with you, just breathe some air a little bit. I've been really cooked in the computer right now, working on my project. I have clinic on Monday, Tuesday, Wednesday, and Thursday. I have 80 patients I'm going to be seeing, and guess what? My crazy brain I just went through all 80 patients today. So when I come in on Monday, Tuesday, Wednesday, and Thursday, I'm not stressed. I know what they want. I know who they are. I know their history. And I'm not walking in with a dumbass look, right? Because patients notice that. And then I can basically, when I come back home, I don't have to prep for the next day. So I can focus on finishing off this damn project. And I can't wait to share it with you. Just very quickly, the project I'm working on is we did something called RNA transcriptome sequencing. I'm working on a bunch of projects. This one's about to become published, which I'm very excited. So essentially what we did is we took blood tests and we look at the RNA expression profiles of white blood cells. And we found that we're able to predict whether a patient's going to be high seizure frequency or low seizure frequency based off of their genetic biomarkers. So that is one part of the publication. The other part is we did a amygdalohippocaptectomy with or without an anterior temporal lobectomy. And what we did is we took off the hippocampus, which, as most of you know, we have a lot of doctors watch our show. It's responsible for learning and memory. It's how you learn, how you store information. Fortunately, a lot of people with epilepsy, that area of the brain, unfortunately, I guess in a layman's terms, cooks itself. It's called hippocampal sclerosis. So we took that out because the patients, that's it. It needs to be taken out because they're medically intractable. And what we did is then we went ahead and we did RNA transcriptome sequencing, and we're finding the same genes that we can detect through the blood test. Because the white blood cells go in the brain and they come out through a location into the bloodstream where we can pull out through a blood test. So that's very interesting, and we're going to be sharing with you with that. It's very difficult stuff. It's freaking complicated, and that's why I've kind of toned down the videos, because it requires me to use my whole brain, and I have to become very creative in this endeavor. So I have to kind of focus on that, right? But let me go ahead and take a look at the last comments here. No, Ricky, you're not dumb. I mean, the stock is at literally all-time lows. Do you use Clover yourself? So actually, I have not had the privilege. I would love to use Clover. I would love to. In fact, once I finish off a couple of things in my third year, we're going to go back on our hunt to contact doctors that are using Clover. And we're going to interview them, and see how they like it. Well, last question here. Also, will there have been to be a small bull run for the smart money to get in some stocks? Well, Usually when usually there's a buy order set, and that buy order gets executed once the fundamentals heal. And smart money doesn't give a shit about if it gets at, $2 versus $5. I mean, they don't care, right? They're going to be putting a lot of money in, right? And that's just how it works. And they're going to do their intrinsic value calculations or DCF. And if they can make 10, 15, 20% a year, that's fine by them for the next 4 or 5 years. Easy. Okay? If you want to follow institutions and look at the SEC filings for the institutions are not selling. Institutions that own Clover Health are not selling. Okay? All right, ladies and gentlemen, this was a 30-minute video. I wanted to just take some time with you guys and talk with you. I should have walked a little bit, and probably got a couple steps in, right? But I wanted to sit down with you guys. I appreciate it, Tyler. And just talk with you guys, kind of slow it down a little bit, talk with you guys, and just kind of have a good chat. What I want in the future, and this could be anybody. So I'm going to be opening up in the future, if you guys are interested, opening up what the F do you call it? Like a link, where you click the link as you're live, and you can come on the live, and we can have a discussion together. It can be more than one people, 2, 3, 4 people. No matter if you're very smart at the stock market, you have experience, or if you don't, come on. Ideally, I would definitely love to have a very wonderful discussion, good 50-minute, 1-hour discussion, chat with our subscribers, but in a way that's productive, that really breaks down some graphs. And I think that would be very, very helpful. A lot of you folks are very smart in the market as well, so I want to bring you guys on, so you guys can say what you think is going to happen, and I feel like that'll be very informative, and it's really going to help a lot of people that really don't know what the hell's going on right now, because they're working and they just don't know, they don't have access to the data and X, Y, and Z. So I was thinking of doing that. Let me know what you guys think. But I really like that, kind of like an interactive approach. Unfortunately, if for the people that are in the mastering, I think you've realized that it's very hard to find folks that we have a beautiful community in our private group. But if you go outside of this community, it's very difficult to find people that have the same interest. So I think if we can make some form of little podcast, just talk, I think that would be very nice. It's not going to happen like a lot because I'm just really busy. But the time I do want to spend with you guys, I want to spend as quality. But in the future, guys, we just have to, all eyes are going to be on the next earnings report. I'm just letting you know right now, I'm going to analyze the crap out of the next earnings report. And all the eyes are going to be on the free cash flow and net income, but preferably the free cash flow. And hopefully they do it. I don't think they're going to become EBITDA positive this year. I highly doubt it. I highly doubt it. But we'll see. But I'm telling you right now, I don't think so. But if they can prove me wrong, and these are my expectations, and I'm a bull on the company, if they can prove me wrong, then holy shit. If they can do it, then I don't even know how much this thing can go up. But I don't think it will. I'm like 99%. They're not going to become profitable in 2023. I think it's going to be late 2024, and then 2025. Also, Elon Musk believes bull market comes back post 2025. And I believe Elon will most likely bring Twitter back to becoming a public company, the new Twitter, anywhere post 2027. Okay? And the last here, but they have enough to make it through a bigger downturn. They do. They have enough cash. They do. And they're about to save even more cash. So I have no doubt they're going to survive. The question now is, when are they going to become profitable? And I have to make a couple of moves before that, if you know what I mean, right? because time is ticking before this thing goes off. And luckily, there's been a couple of, for all the folks that have been invested in this, and they've been averaging down. You already know what I'm talking about. It's been a blessing in disguise. This is a freaking gift. But I understand there's a lot of new investors out there that are scared, and I get it. It's pretty scary. But understand that things get a little scary when you see these little delisting things. But understand that it just needs to go up over $1. And the reason why it's down is because it's negative free cash flow, and we're living in a monetary tightening policy, and we haven't even basically dropped our interest rates yet. So chill out, relax, and we're going to have a great time. And for all the folks, in the future, hopefully we'll do a nice little event in the future, maybe virtual event, whatever have you. But part of our Mastering Stock Market students, we can meet in Las Vegas and enjoy ourselves once we run through this literally toughest decline that the market has seen, and we're going to essentially rise up like champions, and we're going to party, but just don't spend it all in one place, okay? Just don't be stupid with that, okay? Don't spend it all in one place, but we can have fun. I'm going to go back to work. I'm going to go ahead. I'm going to do some, I can't wait to share with you my findings on the androgen signaling regarding seizure frequency. And we can also predict aneurysms in the brain from a blood test. So there's a lot of things that are cooking. I have multiple hats that I'm wearing, but hopefully in the next 10 years, everything will collide together in an intercept, and will become a positive feedback loop. All right, ladies and gentlemen, love each and every one of you. My apologies, it's been a while. I hope this 37 minutes, my tribute to you all. I love each and every one of you. It's really been a privilege to have this wonderful community. But we're going to go ahead and show you what CNBC is not going to talk about. CNBC is going to tell you to buy when they sell, and essentially to sell when they buy. And that's the truth. All right, folks. I'll see you on the next one.